Welcome back, guys, to the Keeping It Real Estate podcast. Oh, listen to me. I am Bree, your host, and we're here today. Brittany's back with us. She's a loan
Yay.
officer. Welcome back, Brittany. We missed you.
Thanks so much for having me. I'm so glad to be back.
Yeah, so we got another round of the mortgage updates and talking about the market. We're excited today to catch up. It's been a while, so we're looking forward to hearing some good info from you today.
I'm looking forward to it.
Yeah, so first of all, guys, if you're enjoying our content, and I've seen some comments from you guys, so I'm excited to hear you're loving what we're sharing. Make sure you like, subscribe, and hit that bell so you're notified when we have new videos and new updates for you as it relates to the real estate market and particularly the Raleigh estate market. So we are so happy to see you guys engaging, commenting, and enjoying the content, and we look forward to bringing more great info to you that will help you make great decisions in your real estate purchase. So today, Brittany and I want to talk about one of the top two traditional mortgage loans that we hear a lot of questions about, guys. It's always, should I go conventional or should I go FHA? And so today, Brittany's going to break down the difference between the two and then give you some examples about the two and talk about the benefits and maybe the cons of each loan product, if there are any, right?
Yeah, for sure.
Okay, cool. So let's talk about what are the FHA and conventional loan.
Yeah, I'm really excited to talk about this topic because a lot of times, especially first-time home buyers, when they come to me, they want to get pre-approved for an FHA loan right off the bat. And although it's a wonderful product, it's not always the most beneficial program for everyone. So I'm kind of excited to debunk that the FHA is always a first-time home buyer's most beneficial program. So a conventional loan is your standard loan. It's not backed by the government. If someone thinks of a mortgage, you're typically thinking of a 30-year fixed rate, conventional conforming loan. It's your most standard loan that follows Fannie Mae and Freddie Mac guidelines. An FHA loan, on the other hand, is backed by a government agency, and they were created to help more people become home buyers. So they have a little more leniency when it comes to their qualifying guidelines, but that also comes with some taxes.
Yeah, I'm glad to hear that. I think more recently, I am seeing buyers become more educated about the conventional loan being an option with not the conventional 20% down payment that they have learned over time that most people think you have to have 20% down to go conventional.
Yeah, absolutely not. I mean, you can even go as low as 3% down on a conventional loan. So 20% down is absolutely not necessary at all for a primary purchase.
And can you tell us, I think one of the key reasons people do put down 20% when they're in a position to, why they will put down 20%?
Yeah, so if you put down 20% down for a conventional loan, you don't have mortgage insurance. But it really varies depending on the risk factors included in the loan. So even if you're putting 5 or 10% down, you'd be surprised at how low that mortgage insurance could be. And it really would be beneficial to keep some of that money in your pocket rather than having to pay 20% down just to save a little bit monthly.
Correct. And I mean, even up to several, maybe $700,000 purchase, is that usually about a few $100s that you see? What is it typically about for mortgage insurance?
Yeah, it'll vary. We have 5 different mortgage insurance companies that we get quotes from. So it varies between companies and on the day, just like rates do. So the more down payment, the lower the mortgage insurance premiums are versus, saving a little bit of money in your pocket on a down payment, then, you'll have a larger monthly mortgage insurance premium.
Okay, so cool. So both loan products do have mortgage insurance. Can we talk about what mortgage insurance is and again, explaining between FHA and conventional what that means?
Sure, yeah. So I think the biggest difference between both of those loan programs is the mortgage insurance. I mentioned taxes earlier. When you're using an FHA loan, because it is backed by the government, it's great. It allows people to get into homes, but it comes with these taxes or mortgage insurance premiums. So on an FHA loan, you're going to have 1.75% of that loan amount added on to your loan amount. So 1.75 is taken from the base amount, added onto the loan amount. So you're already starting off with a little less equity than if you were to do a conventional loan. FHA also has monthly mortgage insurance that will never drop from the loan amount until you reach, unless you put 10% down, then after 11 years, it will drop. Or of course, if you sell the house or refinance into a conventional loan. Now, a conventional loan, if you're putting 20% down, you won't have any mortgage insurance. But if you put less than that, there is no built-in mortgage insurance into the loan amount, unlike the FHA loan, but you will have some monthly, but that will automatically come off once you reach an 80% loan to value in your home. So as you build equity, you are able to eventually drop that mortgage insurance from the loan when it comes to a conventional loan. So that's certainly the biggest difference between the two loans.
So if you qualify for conventional, you automatically are going to save about a 1.75% variation versus the FHA loan.
Yep. And you'll have, more equity in the house at purchase because your loan amount is going to grow with the FHA upfront premiums built into there. But again, that's just part of taking advantage of this program. If it's the only way to get in a loan or get a home, it's the way to go because you can always refinance into a conventional loan down the road.
Yeah, so we don't want to, put one that is valued better than the other. How FHA allows it fits a first-time home buyer maybe because of certain things, student loans and things like factors that come into the qualification process that could maybe allow you to get in a home and get qualified, right? But a conventional, if you had the option between the two, it may be a better option for you.
Correct. Yeah. And some of the other differences between the two loans, an FHA can only be used for a primary purchase, whereas a conventional you can use for a primary, second home, or even investment property. The down payment options can also fluctuate. So on an FHA loan, your minimum down payment requirement is 3.5%, where your standard down payment amount required for a conventional is 5%, although there are some programs that if you qualify, you can put as little as 3%. So if you qualify for that 3% down option conventional, you're already having more equity in the home because you're putting a lower down payment and you're not having that built-in mortgage insurance on top of the loan amount if you went FHA. And earlier I mentioned that FHA has more lenient guidelines. So one of these includes credit score qualifications. The minimum credit score for an FHA is 580 standard. You can probably get a little lower. You can still probably qualify with a little less of a credit score with a larger down payment FHA, whereas a standard qualifying minimum credit score for a conventional is 620. Now, not to say that if you have a 620 or a 580, you're automatically pre-approved for these loan programs. All the other qualifications still have to make sense as well. But that's where FHA just has a little more leniency in their guidelines, if you're debating the two. And we can always look at an app. I can give you quotes for both types of loans, and you can make the decision that makes most sense for you as well.
Awesome. And I love that about you. You're going to give them side-by-side options so they can look at the black and white, look at the numbers, the costs, and actually make a decision what makes the best apples to oranges. Over time, what am I looking to accomplish? And one may be better than either, right?
Correct. Yeah, not everyone has the same financial goals. So I can't decide that for the buyer. I'll present them with the options and they can decide what makes most sense for them.
Yeah, and you said something that I want to go back to because I have a little saying about this. You said that for FHA you could go as low as 580, and then you mentioned 620 for conventional. Yep. But what I've learned from great loan officers like yourself is you have to pay to play, right? So just like when you buy a car and your credit is not so worthy, when you buy a house and your credit is not so worthy, yes, you can finance with those credit scores, but it will cost you a little more, right?
For sure. I mean, your interest rates are going to be heftier. Your mortgage insurance premiums are going to be heftier. So we also have programs in place that if we want to get your score up to qualify for a conventional loan, we can look at what that would look like for you. And depending on your buying timeline, see if it gives us enough time to get you to where you need to be to have more beneficial properties when it comes to a loan.
Okay. Okay. Cool. Yeah, that's great. So I really like that. I really think that buyers need to understand that there's more than one way, more than one loan product to allow them to accomplish their home buying goals and not just come dialed in on one choice and so set based on the broad amount of research that's available to everyone on Google right now.
Yeah. Yeah.
Yeah.
Yeah, make sure you talk with someone you know and trust that is knowledgeable. Google doesn't always have the most recent guidelines or rules or is legitimate. So, and the guidelines are forever changing. So don't always listen to your friends or your family. Make sure that you're talking to someone that knows you personally and knows your financial goals and can put together a loan program that makes most sense for you.
Yeah, I love that. So let's talk about something aside from these two products, and we'll get back to this. Let's get some updates on the market from the mortgage industry side. Share some insight with us. How are things looking with rates? Any insight you feel is important for buyers to know?
Yeah, so I mean, March, they were calling for a huge rate drop, and unfortunately, that's not happening. That was confirmed this week, actually. Inflation just isn't where it needs to be, allowing rates to drop. So we're going to stick, where we are for now in the sixes, potentially sevens, until inflation numbers go to where they are. And hopefully, early summer, maybe late spring, early summer, we'll start to see rates drop. But again, when rates do drop, everyone's sitting on the sidelines for that to happen, right? So it's going to be a mosh pit, and competition will be strong. So buying now is still a great time, no matter what the interest rates are. They are going to fluctuate. You're not stuck with that interest rate forever. So if you're ready to buy, now is a wonderful time to do so.
You're right. So I guess people need to understand that. Um, and I just posted a reel today. Is it a good time to buy? Is it a good time to buy? You and I speak the same in that area. When you're ready, that's the time to buy because, like you just said, when it comes time to refinance, you meet those requirements too. You get that as well. But that same home may not be available to you at your
Right.
price point when rates drop because now the competition increases, and so now it's going to make it a little tougher to accomplish that goal, especially for a first time buyer, don't you think?
Oh, agreed 100%. You know, money is valuable, right? So if you want to make sure that you're putting it where it needs to go and you're not wasting it, when rates do drop and competition gets strong, you're going to have to make larger down payments to be a little more competitive. You're going to have to offer over asking to beat out the rest of the competition. In today's market, I mean, we are seeing a little bit of it. The Raleigh market is always booming, but you're not seeing it as aggressively as it will be down the road whenever rates do drop.
Oh yeah, I agree, and I do think that the time of year affects that as well. I know some of my buyers who we started at the end of 2023, and we just went under contract recently. As we started to look at more homes, the offers had to get more aggressive, right? So even with rates being a little higher than they have been, the competition still remains.
Oh,
Would you
yeah.
say so?
It's strong for
Yeah.
sure. We're certainly seeing multiple offers on homes and whatnot already. So getting ahead of the bulk of the crowd will work in everyone's benefits. So buy a house now.
Yeah, and I think that another bit of insight that we both bring that we often are speaking from the capital of North Carolina, from Raleigh, and I don't know what it looks like in rural South Carolina or wherever other places there may be. But here, if you're thinking about relocating, or if you're living here and you've lived in your home sometime and you're looking to get back out there, the market has changed. The way that we've offers has changed, and so you can't bring another state's thinking to our area because you will be put behind the curve, or what you bought 7 years ago. The process is going to be very different when it comes to getting out here, don't you think? What would you
Agreed.
say?
Agreed. And processes and guidelines are ever changing. So if you did buy 5, 10 years ago, it might look completely different today. So it's never too early to at least get pre-approved, be comfortable with the numbers. So if you're looking in 3, 6, 9, 12 months from now, you have a better idea of what you're comfortable with spending and what numbers would look like for you. Or it gives us time to get you to where you need to be if you're not there today. So apply early, make sure you're prepared and be prepared in this market because it is a competitive one for sure.
Yeah, yeah. You and I have a client together right now who's been approved for some time, but because you set her expectations financially and I took her to start to see what's in the market, she has a few more things to do, not much, but she's actively watching the market and progressing to remain in a great place when she's ready in the next couple weeks. So
Yeah.
that's an example of someone coming in. I mean, she started last year, but we were able to prepare her together by you again setting those realistic financial expectations, and then me giving her the market insight and the loan officer and real estate agent working together. So yeah, I mean that was an example of what you just said.
Yeah, for
Yeah,
sure. I'm
yeah.
excited for her. Yes.
Me too. So let's talk about, I think we kind of, is there any more pros or cons to each loan product that you feel that a person should know? And then maybe let's get an example of someone with, let's say, the same credit score was to actually purchase maybe at our median price of 400,000. Um, both using a conventional and a FHA loan, what would they look like? So let's talk about pros and cons and see if we have anything else left. And then let's give, everyone an example of 400,000, 700 credit or conventional versus FHA.
Perfect. Yeah. So there are certainly some pros and cons to these programs. And the FHA pros are more lenient guidelines. If it gets you to a house today, it's a wonderful program and you can always refinance down the road, but it can offer you lower down payment options rather than your standard conventional 5% down. And it has higher debt to income ratios, lower credit score qualification. So an FHA loan is wonderful in those aspects and can get you into a home if maybe you don't qualify for a conventional loan today, but you can always refinance into one down the road. Some cons about the FHA loan are the mortgage insurance premiums, that upfront mortgage insurance premium. Again, it's a wonderful program built to help people get into homes, but you're paying for that through these mortgage insurance premiums, and you're stuck with a primary purchase only. It can't be used for a second home or an investment property. And this year's loan limit for an FHA loan is capped at $498,257. So if you're looking for anything larger than that, FHA will not be your route. Now, conventional, it is possible to have no mortgage insurance. And if you do have monthly mortgage insurance, it'll drop eventually once you hit enough equity, or you can even request to have it dropped. So that's certainly a perk to having conventional, and you can go as low as 3% down if you qualify. So it's even less of a down payment than FHA. So you just have more initial equity with a conventional loan because you don't have that built-in mortgage insurance into the loan amount going conventional. And the conforming limit for conventional loans is $766,550, which has increased pretty aggressively year after year. So I think 5 years it was like 400 and something before you get into jumbo loans and stuff. So being able to hit a conforming limit under $766,000 is pretty amazing. So it allows you more flexibility with loan amounts as well. And your cons with conventional are just the tighter restrictions, tighter debt to income qualifications, needs higher credit scores to qualify. But if you do qualify, it's a wonderful loan. Again, both of these loans have great perks. You just have to decide what makes the most sense for you.
Yes, and just understand, I think earlier it was something I wanted to mention when you just said something similar to this. Understanding what that does when you go into the market to actively buy. I think a lot of times buyers speak to their loan officer and they speak to their real estate agent, but they don't understand that all marries together, right? So a lot of times my clients are surprised when I say, when they find a home and they send it to me and I say, okay, let me do some research on the back end and I'll update you shortly. And I say that home doesn't qualify for FHA. And they're like, what? So I think that buyers need to understand that individual sellers and even builders, new construction, but mostly individual sellers like ourselves, they can decide what type of loan product they want to accept, right? And FHA sometimes is one that they don't want to accept because there is something that they're held to, that if the home does not appraise, then they would have to refund back monies that's typically non-refundable up until a certain point. And so understanding that if you are qualified for FHA, that some homes we may not be able to look at because the seller does not accept that loan product.
Yep, and there's also with the appraisal with an FHA loan, they're a little more strict than with a conventional loan. So if there's chipped paint or a missing handrail or something like that, those items will probably need to be fixed prior to closing on an FHA loan rather than a conventional loan. So even though you qualify possibly for an FHA loan, it might not always mean you're going to win bids when you're in the market and trying to make offers, for sure, which is, it is what it is. Cash is king, but typically conventional comes after that. So
That's what we say. Cash is king, conventional is queen, and everything else after that. And I think that that's really hard to tell someone that someone's like not is deciding they don't want to accept your loan product. But keep in mind that's the thing. Another benefit to being in the market when it's slower, sellers are open to different varied products because they have less competition, so they're willing to take higher risk with the buyer. Once the competition rises, then they don't have to take a certain product because they have more than enough people who want to buy their home.
great point. Yeah, agreed.
Wow, wow. Well, thank you. That was really a good layout. I learned some things on the new increase in the actually max for FHA. I did not know that it was that less. That was a lot lesser than conventional.
Yep.
So that does cap in our market. 498 is right at that median price, just a little above. So FHA buyers need to understand that. Let's talk about if we put them side by side with the 700 credit score, 400,000 purchase price. What would that look like for conventional, and what would that look like for FHA?
Yeah, for full disclosure purposes, I ran these quotes last week sometime, so they are not accurate. They are simply just ballpark figures for us to use for comparison's sake today. Okay, so don't come at me if you apply and you have a 700 credit score and you're trying to get a $400,000 house and your numbers are not the same, because I guarantee you they won't be. But here we go. So I did a 5% down, a 3% down conventional, and a 3.5% down FHA, just to show the differences, all using a $400,000 purchase price, 700 credit score. So a 5% down conventional option is going to give you an estimated monthly payment of $31.88. Now that's including principal and interest, estimated insurance, estimated property taxes, and mortgage insurance. And your cash needed to close is $27,000. So your cash needed to close is including your down payment plus the estimated closing costs and setting up your escrow, which can be a whole podcast in itself at a later date to explain what escrow is. But then versus your 3.5% down FHA, your base loan would be $386,000. But remember, we're adding in that 1.75 upfront mortgage insurance premium. So your loan amount with your FHA is $392,755. So you're starting off with much less equity than if you were to go conventional. And your estimated monthly payment is pretty similar to that 5% down at $31.94. So it's just $6 estimated higher. But then your cash to close is $21,000. So it's $6,000 less than what your 5% conventional option would offer. So it's really up to you if you want to come in less cash to close, but a lower down payment. This is where it's really the borrowers, whatever they feel best for them, or depending on what their financial goals are. And now we also have a 3% down home ready, home possible conventional option. This allows you discounted interest rates and mortgage insurance premiums, and Fannie and Freddie just rolled out a $2,500 grant for those that qualify as well. And this is based off of income qualifications. So if we were to use that program using the same $400,000 purchase price and 700 credit score, your estimated monthly payment would be $3,116. That's $72 less than the 5% down conventional option and $78 less than the FHA. So I mean, that's pretty hefty. I think that would add up, month after month, to save an extra $75 to $78 in your pocket. And your cash to close is $16,500. So it's over $10,000 less than putting 5% down, and it's $4,500 less than FHA. So if this person qualified for that 3% down conventional option, they would benefit more so from the conventional option rather than FHA, both monthly payment wise and cash out of pocket, pretty significantly. So again, it really comes down to whatever the financial goals are of the buyer and what they're looking for. But don't always think FHA is the best program for first-time home buyers, because in this case it wouldn't be, but it could be in someone else's situation.
Right. Just know your options and be able to speak to say, hey, can I look at this as well? Right. Don't just take the first thing and run with it.
Right.
Yeah, and it's good to have both. Again, when you're in the market, maybe one works better than the other for you savings wise, but maybe you have to compete. I've had clients that they qualify for both. They want to go with FHA for the down payment and closing costs, but they get into the market and they need the conventional loan to get the homes that they like.
Right.
Good, good, good. Thank you. I love that. I love to see the numbers. I'm a numbers girl. I love to see black and white. It allows people to make decisions. I think that is the best way. Just look at it and side by side. Numbers don't lie.
Agreed. Agreed.
Yeah. So I guess we'll be coming back next month with something. We'll find something fun to keep people updated. I think with our interviews and when we meet, the market changes so much, so it's always about what's relevant right now, right? I think that we need to keep people really the real estate market is like the stock market, is ever changing, so we always want to bring relative information.
Agreed. I mean, last month we were still hoping for a rate drop in March, and here we are today, and it's been confirmed this week that it's not happening. So don't wait on rates. It's not always going to work in your favor, but they can be extremely worse. So we're really still in a good place. Of course, we're not where we were during COVID times, but we'll never be there again. So rates are still pretty average considering, mortgages throughout a lifetime.
Yeah. And I think we may, if with of course bringing some other hot stuff, maybe we need to talk about the creative financing side and some of the things that are being done to help with rates right now. And I know the 2-1 buy down is a big thing that a lot of loan officers are talking about. And I know some other things you can buy down points and things like that. And you'd be surprised, a lot of buyers don't know that.
Yep, I just provided quotes today and gave them what it would look like for to buy down the rate 1, 2, or 3 points. And again, that's a personal preference. If and what the break-even point is too.
Correct.
If you think you're going to buy or refinance in the next 2 or 3 years, maybe financially it doesn't make sense for you. But there are some people that are just rate conscious and they want the lowest rate, whatever they can afford at that time, and that's fine. But you'll get all those options with me. You'll get all the resources so you can make that decision for yourself. But there are still the temporary 2-1 buy downs, and that's where the seller is paying for a temporary buy down for 2 years. So it's a wonderful opportunity if the seller is willing to pay for that credit. But then you can also look at permanent buy downs as well, and the seller can pay for those as well. So there's many options to not have to have whatever today's rates are.
Well, thank you so much, Brittany. You always bring a little bit extra. I love that. I'm that person that listens, that hears that 1 or 2 things that I've never heard before, and take that back to my clients and listen, this is an option, because not, like I said, not all loan officers share this knowledge with the client. They kind of navigate for them, and I love that you empower people And that's my thing. Empower people with the information and allow them to make their own decisions. So thank you for always doing that.
My pleasure. Thank you so much for having me. I love it.
Y'all, this is my girl Brittany from Equity Resources. I will make sure her information is dropped down below. As always, reach out to her, have those conversations, get buy ready. If you're relocating, get buy ready. Know the market, know what you can do, know what you can afford, and she'll get you right. She'll have you ready to make your decisions financially, and then you can reach out to me, and we'll find that perfect home for you.
I love that plan.
Yeah. So as always, thank y'all for joining us. Make sure y'all hit that like button, subscribe, and don't forget to hit the notify bell so you are informed every time we have a new podcast coming out. We so enjoy you all. We appreciate you all. Without you, this would be nothing. So thank you all for engaging, commenting, and just supporting us as far as we're a new podcast. We look forward to continuing to committing to you all and keeping y'all informed about real estate. Thank y'all again. Until next time, have a good one.